Welcome to the Titans of Industry show. I'm here with Mish, Shedlock of MishTalk.com. It's one of the most popular financial blogs out there. In fact, it's the third largest financial blog by readers in the country, and I'm very excited to have him here. We're going to talk about politics. We're going to talk about Europe. We're going to talk about what's going on with the Trump administration and the Chinese American trade wars on the horizon, or maybe not. And we're going to talk gold and silver. Mish, how are you today?
Pleasure to be on the show, Leo. I'm doing quite fine.
Good. Look, I want to dive into GDP numbers and kind of the way that they're being presented by the federal government as opposed to what they really reflect. Do you have an opinion on this subject?
GDP estimates are all over the place. I've never seen such a wide state of views on what GDP for the first quarter is going to be. On February 2nd, the Atlanta Fed GDP Now model predicted 3.4%. It's now fallen all the way to 0.6%. Meanwhile, the New York Fed, they call theirs a nowcast. The New York Fed nowcast is at 2.8%. Supposedly, the margin of error on each of these is 1%, yet there's 2.2% percentage points differences between the two of them. The ISM is estimating 4.3%. That's the highest estimate that I've seen. And the market PMI, the folks at market are estimating 1.7. I asked Zero Hedge, a extremely popular blogger, what he thought. He guessed 1.3%. What's interesting about the 0.6 figure is I arrived at the same number about 5 days before the GDP Now forecast came out. They were at 1.2% at the time. I looked at auto sales. I looked at retail sales. I looked at slowdowns in various places across the board, and I said, we're going to be, my guess then was 0.6%. It was interesting to see the GDP Now model come out and match my forecast. Meanwhile, we've got people touting all kinds of soft data, and we saw it again today, by the way. The sentiment numbers came out, 17-year high. And Bloomberg Economy was wondering why or when, more specifically, that consumers would start spending because sentiment was high. Well, a number of people, John Hussman, myself, I talked about this 2 years ago, in fact, this idea that consumer sentiment and consumer spending are correlated is statistical nonsense. In fact, for almost the last 2 decades, consumer sentiment has exactly followed the S&P index. It's not a measure of spending at all. It's a measure of confidence in the stock market.
That's very interesting. I'm looking at 4 ugly charts. One of them is the commercial and industrial loans. It's now back to its level in 2011. So it's plummeted since the start of 2015. And you don't have to be a banker to see that this is a serious problem. Businesses borrow more money than when the economy is doing well or likely to get better, and now they borrow less when it's weak or likely to get weakened. And then I'm looking at loans and leases in bank credit, and it shows the annual change for real estate loans, and it's very, very low. It's plummeting. And also consumer loans. Consumer loans is horrible. Banking activity is stalling. If this continues, the U.S. is going into a lot of problems, deflationary problems. Do you agree with what's going on? And what do you think of this data that's coming in from this lack of loans in the economy, lack of velocity of money?
I think you've hit the nail on the head there. The Fed is hiking. What little borrowing we're seeing, corporations are still borrowing money to buy back their own shares at at extremely inflated PE prices. The demand for loans for business expansion is falling. That is, to me, part of the hard data that suggests GDP is not going to be good as what many, if or most of the estimates are coming in out. That was part of my factor for suggesting first quarter GDP was only going to be 0.6%. I took that into consideration in my forecast. We have people like Lacey Hunt, who is one of the world's biggest bond managers. He invests solely in the U.S. Treasuries. He looks at some of this data, and he actually believes the low in long-term yields is still in the future. So there are a number of us, but there's a few of us, just a few of us, that see this weakness and thinks that's the message here behind the flattening of the yield curve, which we've seen recently.
Now, Mish, where do you see growth? Where do you see companies prospering? If Trump continues with domesticated policies, we might see American companies that produce and manufacture and service Americans do very well. Do you agree with that? Or do you see multinational companies that are selling to Asia as potential amazing investments, because so much is riding on what Trump can do with China? If we can avoid a trade war, Boeing and other companies are building facilities for the first time outside the U.S., building facilities in China. This could be a great renaissance for the American manufacturing machine if we can avoid trade wars with China.
Economy. If that's what one believes, and that's certainly what I believe, if the U.S. economy slows, emerging markets tend to get clobbered. That's just a general rule of thumb, and the reason is the U.S. imports so much more than it exports. It imports from China, from emerging markets, from other places. So there's a world of pain ahead of us if my assessment is correct that the U.S. economy is slowing. The second piece of the puzzle is in regards to trade wars. Well, I am a huge free trade advocate. I believe it is one of the few things that Alan Greenspan was ever consistently right about. An interesting thing about that is it's one of the things he's most often panned for. The one thing that he was consistently right on throughout his career, Greenspan was always a big free trade advocate. But I expected that we would see a trade war with China. It's now been put on hold. Trump said numerous times when he was campaigning for president that one of the first things he would do is label China a currency manipulator. He changed his mind on that yesterday. In fact, he changed his mind on a lot of things yesterday, that just on NATO, on China, on some other aspects related to Europe. So we'll see. The question is, does he mean what he says now? The curious thing is he was talking about the need to tell the truth. And I asked, well, when does it start? Because he's saying radically different things now than he did when he was campaigning. However, this is all good news, actually. He allegedly worked out a deal with China, or offered China a deal that he would back off on them on the one. That was one of the other things that he was talking about. If China would help rein in North Korea. I have no idea what China can do to rein in North Korea. but perhaps this is really just Trump's polite way of saying, you know what, I really don't want a trade war right now. And, he can offer this little carrot to China, and essentially for returning nothing, because China's not going to have much influence over North Korea, in my opinion. So here we are, a trade war, at least between the U.S. and China, has been averted for now. However, a trade war between the UK and the EU has not been averted. That looks increasingly likely to me. And again, nothing ever good comes out of these trade wars. If there's a trade war at all, it is going to slow the global economy, and here it is at a time. And I have to hand it to the IMF, because they're consistently wrong at every turn. They had been downgrading all of their economic forecasts for the world. It's really been laughable. And now they've been behind the curve on all of those. Now they're actually upping their forecast for the global economy right at a time when I think, because of the U.S., they ought to be downgrading their forecast for the global economy. Very few people see what's coming, in my opinion.
Do you think that what's going on right now in the Middle East will influence the coming elections in France? Do you see it as a possibility that the populist vote will win there? And if so, do you think we're going to see France talking about exiting the euro?
That was the other thing. I was struggling to come up with the third thing that Trump changed his mind on, and he just mentioned it in that last sentence. It was Syria. Trump said, he said numerous times that it would have been a mistake for Obama to bomb Syria. So what does he do? He goes into Syria, and of course Trump changed his mind on Russia as well. So that's two more things that Trump changed his mind on. In regard to the French election, I commented very recently. In fact, I think I was the first to pick up on this, that the polls in France have tightened so much that literally anything can happen. At one point in the last few days, the polls were such that there were a mere 4 percentage points difference between the top 4 candidates. We are talking Marine Le Pen, who's either flip-flops in one or two, Emmanuel Macron, who everyone expects will be the eventual winner, Fillon, who was involved in, who was expected to win this whole thing outright, was involved in so many personal scandals. He's dropped down to 3rd or 4th place. And recently, the rising star in the French polls is Jean Mélenchon, who is now 3.5, 4 percentage points behind Emmanuel Macron in some polls. Now, everyone expects, and it is indeed likely, that the eventual runoff is going to be between Marine Le Pen and Macron, but that's not at all a given. The 35% of the voters say they're going to sit this thing out. A similar percentage doesn't even know who they're going to vote for yet. And the soft vote is actually for Macron. So some 33%, 37%, I forget the exact number, of the people who claim to be for Macron are open to changing their mind about that. Only 15% of those who say they're going to vote for Marine Le Pen say they're capable or willing to change their mind. So when we have all of these undecideds and all of these people who claim to be sitting this thing out, literally anything can happen in the election. There is a very real, even if it's a small chance, a very real chance that we could see something like Marine Le Pen running off against Jean Mélenchon, and both of them are anti-EU, anti-Euro, anti-NATO. Wouldn't that be a hoot if that's the final matchup? I don't expect that to be the final matchup, but that's a very real possibility. Any of those four candidates can make it into the final round, and it wouldn't surprise me very much at all.
Very interesting. Look, I want to get your opinion on what these kinds of global geopolitics issues can create in the gold and silver market, and also with regards to cryptocurrencies. You know, a lot of these Middle Eastern investors are taking flight and taking their money out of the Middle East and moving it into European banks, but many of them are now afraid of European banks and moving them either into gold and silver or into cryptocurrencies. Do you think that this continued turmoil will be beneficial to prices of gold and silver and prices of cryptocurrencies? And what do you think as a whole about these digital currencies that are popping? Obviously Bitcoin, but now there are more legitimate new ones that are just exploding in price.
I think we've got a bubble in cryptocurrencies, but we can understand why that is and why that's happening. One of the key uses, actually, of Bitcoin is capital flight out of China. There's a lot of people with a lot of money in China. They want to get it out. One of the ways they're doing it is they're buying cryptocurrencies, leaving the country, and cashing those cryptocurrencies in and parking the money outside of China. That is one of the key. Real estate and cryptocurrencies are the two key ways in which capital flight from China is underway. In regards to the situation in Europe, month in and month out, the target 2 imbalances. This is a measure of what's owed by Greece or by Spain or by Italy to banks in, say, Germany, has been escalating. We are at record high levels of imbalances in target 2. Germany is a surplus. Italy is in deficit, the largest deficit country, with Spain close behind Italy. Were Italy to leave the Eurozone, it would pay back those target 2 liabilities, not in euros, but in lira, and it would immediately cause a banking crisis in Europe. I think anyone that has their money in Italian banks is crazy at this time. 3 of the 4 leading political parties in Italy are all united to get Italy either out of the EU or out of the EU and the euro. It's only a matter of time before there's a referendum in Italy on that. I don't know whether that passes or not, but if you look at rising spreads, actually in Italy and France, I'm talking about bond spread yields, the difference between Italian bonds and German bonds, and between French bonds and German bonds, those spreads are rising. To me, they still don't adequately reflect the likelihood that Italy leaves the Eurozone. I don't think even if Marine Le Pen wins, and I have that percentage a lot higher than most people do, I don't think she can get passed through the French Parliament those policies that would indeed take France out of the Eurozone, but it certainly would cause a lot of strife in the Eurozone if she won. Italy is another matter. I think it's just a matter of time before an anti-EU, anti-Euro government is elected in Italy, and all hell is going to break loose when that happens. So is that going to be good for gold? Absolutely, or I believe it would. There's no certainties in anything. The main driver for gold right now, I believe, is the Fed in the U.S. The Fed still claims that it's going to get in 3 hikes this year. I will be surprised, because of my forecast on the economy, if the Fed gets any more hikes in. And one of the things that's been weighing on gold investors' minds is are all these hikes and belief that these hikes are going to be bad for gold. Well, what if the hikes don't come? And I don't think the hikes will come. And I think we're starting to see a little bit of the market realization of that in just the last week, with Treasury bond yields sinking and gold rising simultaneously at the same time.
Mish, that's very interesting. Where can people find your blog and start reading some of the research that you put out?
My blog is mishtalk.com, MISHTALK. You can probably just do a Google search for Mish, MISH. People ask me how I got that name. Mish is simply the first 2 characters of my first and last name. It came about in 2000. Someone gave me that name, nickname, when I was in a stock chat room. I was typing under Miss Shedlock or Mike Shedlock, and people just truncated it like they did. LOL stands for laughing out loud. Well, Miss Shedlock or Mike Shedlock got truncated to Mish, and I said, that's kind of catchy. I'll keep that. But do a Google search for Mish or mishtalk.com. 3-4 times a day, I write about the global economy, interest rates, silver, housing, global politics, and China. So check it out.
Mish, thank you very much for doing this.
Pleasure to be on the show, Lior. Look forward to being on again. I looked at auto sales. I looked at retail sales. I looked at slowdowns in various places across the board, and I said, we're going to be, my guess then was 0.6%. It was interesting to see the GDP Now model come out and match my forecast. Meanwhile, we've got people touting all kinds of soft data, and we saw it again today, by the way. The sentiment numbers came out, 17-year high, and Bloomberg Economy was wondering why ISM is estimating 4.3%. That's the highest estimate that I've seen. And the market PMI, the folks at market are estimating 1.7. I asked Zero Hedge, a extremely popular blogger, what he thought. He guessed 1.3%. What's interesting about the 0.6 figure is I arrived at the same number about 5 days before the GDP Now forecast came out. They were at 1.2% at the time. I looked at
Welcome to the Titans of Industry show. I'm here with Mish Shedlock of mishtalk.com. It's one of the most popular financial blogs out there. In fact, It's the third largest financial blog by readers in the country, and I'm very excited to have him here. We're going to talk about politics. We're going to talk about
state of views on what GDP for the first quarter is going to be. On February 2nd, the Atlanta Fed GDP Now model predicted 3.4%. It's now fallen all the way to 0.6%. Meanwhile, the New York Fed, they call theirs a nowcast. The New York Fed nowcast is at 2.8%. Supposedly, the margin of error on each of these is 1%, yet there's 2.2% percentage points differences between the two of them.
Europe, we're going to talk about what's going on with the Trump administration and the Chinese American trade wars on the horizon, or maybe not. And we're going to talk gold and silver. Mish, how are you today?
Pleasure to be on the show, Lear. I'm doing quite fine.
Good. Look, I want to dive into GDP numbers and kind of the way that they're being presented by the federal government as opposed to what they really reflect. Do you have an opinion on this subject?
GDP estimates are all over the place. I've never seen such a wide